Friday, August 4. I'm sitting here laughing hard with our cinematographer, who's on the other side of the camera, who has just had her second child, and remarking on the postpartum IQ implosion and laughing hard at each other. So forgive the giggling in the background. Markets are quiet. The mortgage rate is sitting right around 4. The biggest data week of the year, of every month is the first Friday and the week preceding, when we get flash reports from July. You know, here we are, the 4th day of August, and now we've got all this July data, and everything's fine. The financial commentators at the moment are preoccupied with the stock market, which continues to dribble upward. You know, it's not doing this, it's just doing this. And most of them have been wrong. They don't have good explanations for why. Built into the soles of their shoes is worry that any time that you just go up setting new record highs, something bad happens. There isn't any bad evident nearby. A few changes at the White House and things were a little quieter. Nothing like throwing several people out of the windows for a few days and then things just quiet down. But there are some other pieces of misinformation in the wind, and in the copy next to this posting is the detail. But the first piece of misinformation, you'll hear a lot about, oh, the dollar is weaker. Oh, nonsense. The value of the dollar relative to other global currencies today is the same as it was a year ago. The value of the dollar went up last winter when it looked as though the Fed would be aggressive, tightening. Rates up, money comes to the dollar. Then the Fed's probably not so aggressive now. Rates down, money leaves the dollar. Nothing has happened, nothing to worry about. The Fed is on hold. There isn't any trading based on the Fed at the moment. Two things are in the near future. Most likely next month, September, the Fed is going to announce the beginning of a bleeding down of the bonds and mortgages that it bought during the quantitative easing period. And it's not going to raise its rate again until it figures out how much hazard there is in reducing the size of its balance sheet. So the next quarter-point increase in the Fed funds rate, which is now in a band between 1 and 1.25, which is hardly the stratosphere, most likely is clear off in December. You know, it's fun to try to give you things to worry about or to make fun of other people, but it's really summer vacation. It's about as quiet as it gets. The housing markets are doing okay. The economy is doing well enough, especially in the job data related today, that some tendency for rates to go down has been intercepted, and we've stopped out right where we are. So with any luck, by next Friday there'll be something I can scare you with, but not today. Good weekend.